Welcome to everyone. This week video will cover the S&P 500 for the week of December 2nd, 2024. Before we start, make sure you read carefully the disclaimer. I am back after 3 weeks of vacation. Since my last update on the October 21st, the S&P 500 market reached new all-time highs. Let's see in detail what's happened and more importantly what we can expect in the next few weeks. The S&P 500 index formed a 20 days low on November 4th, and an all-time high at 6,025.42 on November 26. Let's start by the 20 days cycle. The low was expected to occur on October 25th. But the 20 days cycle formed his low 10 days later. Meaning this 20 days cycle is 10 days longer than the usually 18 days length. This is certainly due to the American election. This happened very often, when the market expect an important news, sometime this reduce or extend the cycle length. The next 20 days cycle low was expected on November 22nd. The low occurred on November 19th, 3 days earlier. At that stage of the cycle, the S&P 500 market should find support on his cycle line. But on November 19th, the market slightly crossed below his cycle line at 5,895 and 5,885, providing a downside target zone between 5,774 and 5,753. The same day, the S&P 500 market made a low at 5,855.29, missing his target, bringing down the success rate to 83%. In a very bullish market like the one we are in, I don't believe it's a good idea to trade the very short-term downside signal. Unless this is at least the last leg of a longer cycle, like an 80 days or 20 weeks cycle, because in this case all the cycles are on the down phase. On November 26th, the S&P 500 market crossed back above his cycle lines at 5,977 and 5,986. Providing an upside target zone between 6,098 and 6,116. Respectively 121 and 130 points, or between 2.02 and 2.17% of potential profits. On November 26, the same day the S&P 500 market made an all-time high at 6,025, just 73 points below his lower part of the target zone. During the next peak formation, we can expect the target zone will be met. The next 20 days low is expected for the December 7th, during the next low formation. The S&P 500 market should cross below his cycle line, providing a downside target. The 40 days cycle. On the last update, the peak for this cycle was expected on October 25th. The peak occurred 8 days earlier on October 17th at 5,878.46. After forming his peak, the S&P 500 market crossed below his cycle lines at 5,822 and 5,795, providing a downside target zone between 5,765 and 5,712, or respectively 56 and 83 points, or between 0.96 and 1.43% of a potential profits. The target has been met and slightly exceed during the last 40 days formation on November 4th. With a low at 5,696. On November 6th, the S&P 500 market crossed back above his cycle lines at 5,848, providing an upside target at 6,000, for 152 points or 2.59% of potential profits. On November 8th, with a 6,012 high, the S&P 500 market met his target. The next 40 days cycle low is expected on December 8th, the blue vertical dashed line on the chart. We can expect the next peak will form very soon, and during the next 40 days low, the S&P 500 market should cross below his cycle line, providing a downside target zone. Technically the low should at least find support on the 80 days cycle line. Here are the cycle lines and their target for this week. The success rate trading the 40 days cycle is 90%. Let's see the 80 days cycle. With a 6,025 high on November 26th, the S&P 500 market is only 62 points away, or 1.01%, from the bottom part of the target zone, triggered in August this year. Since the high is within 1% of margin of error, we can consider it the target have been met. The purple trend line is the 80-day cycle trend line, or what's first called a VTL. When the S&P 500 market will cross below it, this will confirm the 80-day cycle peak. But more important, this will also confirm the 20 weeks peak has formed or in formation. During the next 80 days low formation, the S&P 500 market should cross below his cycle lines, giving a downside target for this 80-day cycle. Here are the cycle lines and their potential targets if the S&P 500 market cross below them this week. The low is expected during the first 2 weeks of December, the vertical purple dashed line. According to the Hurst principle of synchronicity, since this will be the second 80 days cycle from the major August low, this will also be the 20 weeks cycle low. The success rate for trading the 80 days cycle is 100%, meaning all the trading signal are profitable. Let's see on the roadmap where we actually are. After forming his 40 days low on November 4th, we are right here, and on the way to the 80 days cycle peak. When the 80 days cycle peak will be confirmed, the S&P 500 market will cross below his cycle line, providing a price target for the 80 days cycle, forming a first low around the first week of December, then rally toward his cycle line, using it as resistance, and will resume his down move to the second week of December to form the 80 days cycle low around December 14th. The 20 weeks cycle. There is a very high probability the S&P 500 market is forming his 20 weeks cycle peak. During the formation of this 20 weeks cycle low, the S&P 500 market should find support on his cycle line, which will be around 5,700 on the December 14th. But due to the amount of bullishness in the S&P 500 market, there is a possibility the market will not even reach his cycle line. In conclusion, to sum it all up, the S&P 500 index is still in a bullish phase. However, we expect the 20-week cycle low to form soon. After this low is established, we can anticipate a rally toward the peak of the 18-month cycle. For more information, visit my website Tradingmarketcycles.com. This is the end of this week's video. Thank you for following me. If you like this video, please click on the like button and share this video and subscribe to don't miss in future important videos.